Another live stream. I'm Tomo from Tomo Finance, and with the up and coming Reserve Bank meeting in February looming, it's about to happen. Tonight we're talking about all things interest rates. Will they go up? Will they go down? Will they stay the same? What's going to happen? So we're going to be talking about predictions in terms of interest rates, my assessment on what I think will happen, and then later on we'll talk about how you can possibly save money on your home loan. And before we get to all that, just make sure you quickly read my disclaimer. I'm not a licensed financial advisor. This video is for education and entertainment purposes only. You should seek the help of a professional before you make any changes to your financial position. Now, when we're talking interest rates, let's talk about the journey so far. It's been very painful. So I bought my house right at the bottom, right when interest rates started going up. And like most of you, I rode interest rates to the top, and they've now stalled, or they've stopped at 4.35%, and they've been at that rate since November last year. And February 2025 has been, I guess, announced by some commentators as the first possible meeting or the first possible decision time where the Reserve Bank might cut interest rates. Okay, so it's a very important meeting that's coming up. This is the graph, shows what interest rates has done. Very painful. I know a lot of Aussies are doing it tough out there. Hopefully we've got some good news soon. So it's been stagnant for 4.35% since November 2023. Now, when making its decision on interest rates, the Reserve Bank looks at inflation data, okay, or this is otherwise known as CPI, Consumer Price Index. So we can see that November 2022 was the peak, and then from there it's steadily gone down. So that's a good sign to start with. Inflation is steadily declining. So that's a good starting point. Now you'll see there's three lines on here. Why is there three lines? And the blue lines are kind of like the core inflation. It's called CPI. One of them removes one element. And then there's this orange line called the trimmed mean. And this is what the Reserve Bank really prefers what to use when it's making its interest rate decisions. So you can see the trimmed mean here as at November is 3.2%. Now, why November? We're always a month behind. So the November inflation data was released in the end of December, and the December inflation data will be released at the end of January. So that information will be very, very important for the RBA's next meeting. Okay, it'll be very important for that. But you can see as at November, the trimmed mean is 3.2%. And the RBA's target inflation, where it wants inflation to be, is in the range of 2 to 3%. That's its target inflation range. Now, the big four banks constantly release guidance, constantly release their own assessments on when on interest rates will go up and down. So they've released their predictions, I guess, for what interest rates will do in 2025. Okay, so ANZ thinks that interest rates will drop at the February 2025 meeting. That's good news. That's a good sign to start with. ANZ does think interest rates will drop in the February 2025 meeting. Commonwealth Bank thinks the same, that interest rates will drop in February 2025. The other two banks, NAB does not think they will drop in February, thinks they will drop in the next meeting being May 2025, and Westpac thinks May as well. So what does this tell us? Absolutely nothing. It's a 50-50 split on where the interest rates will be dropped at the February Reserve Bank meeting. The big four banks are split. Doesn't really tell us too much at all, okay? So what do I think? So I think, and again, I'm not a licensed financial advisor. You don't make any decisions based on the information that I'm sharing with you tonight. I'm just trying to educate you to be able to make a really good informed decision. I think Michelle Bullock will be very, very cautious before she lowers interest rates. I think she'll be very cautious. So if you think about, so Michelle Bullock is the governor of the Reserve Bank. If you think about the former governor, Philip Lowe, think about how much flack, how much criticism he copped when it came around interest rates. Scrutinized, dragged over the coals, really, really attacked, okay? She was there, she was on the board when this happened, and she saw this, okay? So I think she'll be very cautious before she lowers interest rates. The December data, how that comes out, will be very important for making the decision. I think if the December data comes out and that trimmed mean number still starts with a 3 or even a high 2, then I tend to kind of agree with the likes of NAB and Westpac that it'll be very, very unlikely that we'll see an interest rate drop in February. Okay, I think it'll be, yeah, the December data will be important. So I think she'll want to see, Michelle Bullock will want to see sustained, continued low inflation data before she lowers interest rates. That's what I think she'll see. And that's a result of how much scrutiny, how much flack Philip Lowe copped. I think she'll be very cautious before she does that. Now, I hope I'm wrong. Fingers crossed it is lowered in February. Okay, if it is lowered, if they do lower interest rates in February, then the banks normally take 2 to 3 days to come out with, the RBA will announce we're lowering interest rates or not. The banks normally take about 2 to 3 days, sometimes a little bit longer, to then announce their interest rate decisions. And if you're on a variable rate, hopefully they pass that on. If they don't pass it on, I think it'd be unlikely if they didn't. But if they don't, make sure you get on the phone, get on the blower, and really put pressure on the banks. Okay, we want them to pass this interest rate on. Help out all the Aussies out there doing it tough. If they don't, make sure you get on that blower, talk to your mortgage brokers, and put pressure on these banks to pass on that interest rate. Okay. So then, the next part, and if you have any, I'd love to hear what you guys think interest rate's going to do. Leave me a comment down below. Where do you think they'll go? What's your prediction? Let's have a little bit of a discussion about this. Love to hear from you guys. Now, the next topic of the evening is how can you save interest on your home loan? And before we get into that, I just want to clarify a point. The things that we're going to discuss tonight can potentially help you save costs, save money on your home loan over the life of your loan. It is very, very difficult to save costs or to reduce your payments, save repayments right now, unless you negotiate for a better interest rate. That's generally one of the only ways to save your repayments right now. That might not be very helpful. We're in cost of living pressures. People are looking for changes, looking for cuts right now. The only way to generally really do that is if you can negotiate a better interest rate with your bank or you refinance into a better interest rate. Having said that, the stuff that I'm going to share with you should help you over the life of your loan. So you should really still get something out of it, and hopefully you haven't heard about this before. Now, what it comes down to is how interest is calculated and when it accrues. And accrues a fancy word for it being added to your loan balance. Now, interest is generally calculated daily and accrues monthly. And what you might find is that the default option for a home loan or a mortgage is a monthly repayment. Now, I thought this was very strange. When I signed up for my loan and that the default option was monthly repayment, I thought, that's a bit weird. Why wasn't the bank wanting to get as much money from me as quickly as possible? That's where my mindset was. But the default option was a monthly repayment. Now, the reason they do that comes down to with how interest is calculated and when it accrues. So interest is calculated daily and generally accrues monthly. So in this first example, we've got the first of the month on the left-hand side. We've got the 31st of the month on the right-hand side. And we make a repayment at the end of the month, $10 repayment, okay? Now, these little semicircles is interest being calculated on your loan balance each and every day. So because that's a straight line, you've got a high loan balance, interest is calculated day by day on that higher loan balance. You get to the end of the month, you make your repayment, that loan balance goes down, but then they add some interest to your loan balance as well. So that's under a monthly repayment option. Now, what I would like you to consider is if it is financially viable to you, it's not going to put you in any distress or anything like that, and you won't incur any penalties from your bank, switching your repayment options to either a weekly or a fortnightly, and I'll show you why that is. So this example here is a fortnightly repayment option. So in the first option, we're paying $10 at the end of the month. On the second option, we're paying $5 halfway and $5 at the end. Still $10 over the whole month, but we're splitting the payments in two under a fortnightly repayment option. And under this option, interest calculates day by day, and you can see at half point where the loan repayment is made and it drops down, and interest is now calculated on a lower loan balance for the rest of the month. Still gets added at the end of the month like a normal loan does, but it's being calculated on a lower loan balance. Now, you might not think that makes much of a difference, but over the life of the loan, it actually makes a huge difference, and I'll show you why that is. So I've made a full video on this on my YouTube channel. You can go over there to check out the full calculation. But I actually did this assessment, and under these assumptions, interest rate 5.6%, that's low at the moment, over a 30-year loan and $800,000 house. Under a monthly repayment option, that first option we talked about, you'll make an additional $176,000 of interest repayments over the life of your loan under that repayment option. Or said another way, if you switch to a fortnightly repayment option, you'll save yourself $176,000 over the life of your loan. And that's purely how interest is calculated, and it's been calculated on lower loan balances each time you make that repayment on a fortnightly basis. You go to weekly, it's an even better result, okay? Really, really good outcome, worth considering. As I said, if you want to see the full video, head over to my YouTube channel where I've got the full calculation, and I'll go through this in detail. And again, this will save you money over the life of your loan. It won't save you money necessarily right now. Your bank's not going to reduce your repayments right now under this method. Okay, it's just saving you a little bit of interest. That's something to keep in mind as well. Hope you really enjoyed that. Hope you got something out of that. Again, I'm not a licensed financial advisor. This is for education and entertainment. I'm hoping to provide you some education, some tools to then you go ask your financial professionals about these things and make better financial decisions that can hopefully help you. If you enjoyed the video, give it a like. Please leave me a comment below. I'd love to know what you think, where you think interest rates will go in this February meeting. And if you do like this finance content, head over to my channel. I've got a whole bunch of finance videos on topics like investing, saving money on your mortgage, other finance topics. So you'll really enjoy them if you like this finance stuff. I'm Tomo. Great to see you again. Take care.